just how impactful could this legislation be if it does get through the Senate?
Well, this is huge, but this is just one piece in the overall plan, and it's completely consistent with what this administration is all about. And it's very bad. And the ultimate judge for this is not our opinions, but is the bond market. And the US bond market is discounting these developments, and we have seen it in the last few weeks, that if there was a safe haven move, investors clearly prefer German bonds to US Treasurys. We had a debt downgrade. And of course, it opens the door to unilateral actions, and that's very, very bad, of course, for the US ultimately.
But the problem with using or thinking about German bonds as an alternative to US Treasuries is simply the size of the market. Even if you believe in the investment case for German bonds over US Treasuries, you can never really compete with the Treasury market.
No, that's absolutely clear, but you can go cash, and there are plenty of other options to go about. And what we have seen the last few months since the beginning of the year, and I think that's the overriding investment theme for this year and for this entire Trump administration, is a huge fragmentation in the global economy, and that means the investors have a home bias. The US investors will retreat into their market. We see it in the capital flows. The Europeans go and invest in Europe. There are opportunities. There's fiscal expansion. There are some reforms. The euro becoming more important as a reserve currency, and the Asians do the same. So I think the Japanese do the same, and that's absolutely the case right now, and it would only be accelerated if the US takes unilateral action in tariffs or with taxing or unilaterally changing the terms and conditions of Treasury bonds.